I haven't looked at any cryptocurrencies in a while. Today I'll show you an ascending triangle on the crypto dash. Be right back. Hi, this is Tim from TradingStrategyGuides.com. I hope all of you are staying safe out there. Since we don't have any open trades right now, this video is likely to be a bit short. Today's trade pick is an ascending triangle on the cryptocurrency dash. We'll get to that in just a minute. Since we've only got a couple of other charts to look at, we'll do that next. And later on, we'll look into the archive for today's maxim. I know it's tough to keep track of what day it is when you're home all the time. Let me help you remember. And also remember, click the subscribe button and hit the bell so you won't miss any of these trade setups. Alright, let's take a look at a couple of charts here. Well, first off, the Canadian dollar Swiss franc ascending triangle that we looked at on Monday triggered on Monday right here. But it did it on only 54% volume. See, that's kind of a wimpy volume right there. So that trade was a no-go. I've moved the line up here to 69.40 and we'll see what happens up there. To sum it up, we'll buy a daily candle close above 69.40 if the volume is sufficient, which means a volume at or above the volume average for a full-size position, or at or above 75% of the average volume for a half-size position. And this is just a reminder of the setup I showed you back in February. This is a weekly Bitcoin chart with a really nice looking bull flag. We're waiting for a candle close above the bull flag to buy this one. You can click the card in the upper right corner of this video or look below the video for a link to the original trade setup video for this. I'm planning on using the daily ATR for stops and targets on this one when it finally breaks. Okay, now let's take a look at the setup on the crypto dash. This is a daily chart of dash against the US dollar with a nice looking ascending triangle. An ascending triangle consists of a strong resistance level like this one here at 77.1350 with several historical touches or approaches of the line, and a series of higher lows as fewer and fewer traders are thinking about taking this short. Each time the price gets back up to the resistance level, it chips away at sell orders until it finally breaks through. It should break out of the pattern with strong momentum. And a good consolidation pattern like this should be accompanied by a decline in volume and volatility like you see right here. I measure the volatility using the average true range or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to buy a daily candle close above the triangle or above 77.135 here. On the breaking candle, to enter a full-size position, we want to see this volume bar reach all the way up to the volume average right there. If it doesn't quite reach the average but does reach 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing this volume number by this volume average, and the result should be at least 0.75. If you don't get at least 0.75 on that, stand aside on the trade. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. So what that means is when this candle breaks up above the triangle here and we get a candle close, that'll be your entry point. You'll buy right there, and at that time you will look down here at the ATR. You will multiply that number by 1.5 and you'll measure that distance behind the order. That'll be your stop loss, and you'll measure 1 ATR above the order, and that'll be your first target. If after entering the trade we get a candle that closes back inside this triangle, we'll take the loss right then and not wait for it to hit the stop loss. Our intent is that a breakout above the triangle should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now, these two rules are the very definition of cutting your losses and letting your winners run. And typically I do this using two positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the setup on the cryptocurrency Dash. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, a deep dive into the archives for our maxim of the day. Tim's trading maxim number 24. A smart person learns from his mistakes. A wise person learns from other people's mistakes. Wouldn't it be great if we could all learn from other people's mistakes? When I was a boy, I didn't want to listen to anything my dad had to say. When I went to college, my dad got pretty smart. He got even smarter as I got further along in life. Of course, I still didn't learn the lesson from this maxim. In fact, I was pretty old before I actually started learning from my own mistakes. So, I share my faults and my mistakes in the hopes that some wise person here will learn from what I did wrong. It's far less painful to learn from others' mistakes than to have to touch that hot stove yourself. Think about it. Remember our Dash US dollar trade plan here. We're going to buy a daily candle close above the ascending triangle or above 77.1350. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the daily ATR, and your first target is 1 times the daily ATR. And remember to click the link below to the trade management video for more details. And also remember to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. And since we're all sitting around the house right now, or at least should be sitting around the house right now, tell me in the comments below what you guys are doing to occupy your extra time. I need some new ideas on things to do. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great hump day, and I'll see you next time.